So the question on everyone's mind is, when will the real estate market in Dubai collapse? Is there a housing crisis in Dubai? And is there a bubble? And when will it burst? These are the questions in many investors' minds when evaluating Dubai in 2024. My name is Meg and I'm an expert in real estate investment and an off-plan specialist in Dubai. I've been in property for over 8 years and I came to Dubai as an investor myself to explore what and where to buy to make the best capital appreciation. I'm pleased to welcome you to my educational channel, RealEstate&Meg, where I'm trying to help others like myself by giving insights, facts and tips that will guide you on your investment journey in Dubai. I will provide you with all the up-to-date information and advise you about what investors should do and expect in current market conditions. So, who calls the Dubai market a bubble? Who predicts the market crash? And who is basing their predictions on the past? A bubble can only occur in a market where prices are rising and the economy is flatlining. A rising population, minimal taxes, and the global economic climate are among the reasons for continued optimism when it comes to the Emirates property sector. Another major factor is that the price of property is still low compared to other cities such as London, Hong Kong, and the Emirates is being seen as a safe haven and has recently become #1 for greenfield investments. These are foreign direct investments coming into the city. This is a clear indication that the biggest companies globally are putting their chips on Dubai. There is a high volume of liquidity in the Dubai market, and this is due to the high supply matched with the high demand, as well as the ease and speed of transactions. There can be a city with many opportunities, but if the tax policies are not friendly and if there aren't channels to bring in money into the country, then it may not be easy to transact. Dubai's GDP prediction for this year is 5.1%, Saudi is at 1.5%, and the entire Middle East is 2.6%. Dubai's GDP is predicted to be double that of the entire Middle East. Dubai has the strongest economy in the Middle East and the second most resilient in the world. Dubai International Airport contributes around 27% of Dubai's GDP, whilst real estate and construction contribute around 22%. So, the predictions in 2021 were that the market will collapse in 2022, and in 2022, predictions were that the market will collapse in 2023. And guess what? In 2023, the predictions were that the market will collapse in 2024. Well, we are now in 2024, and why is it still going up? And what is really happening in the Dubai real estate market? In the last few years, this metropolis has had record demand in real estate. Hundreds of thousands of professional investors and amateurs invested in apartments, townhouses and villas. Not everyone made money and are satisfied. So what went wrong for some? Many investors bought impulsive investments. They didn't anticipate the exchange rate hikes and miscalculated their financial capabilities. That is, buying with their last savings, unable to cover the full amount, hoping for a quick flip after paying only 30 to 40%, which is a huge risk. The market is flooded with unverified and unexperienced brokers who overhype the market and promise unrealistic, astronomical returns. Some investors chose the wrong developers, location, or project. They had no strategy or knowledge of what to buy. Dubai can be a confusing and overwhelming place with developers and projects, and that's why the right advice and broker really matters, and it means the difference between buying a good investment or a bad one. What factors influence the Dubai market and why is it so popular? And will this trend continue? It is an oasis in the desert and an economic miracle of the 21st century. It has transformed from a fishing village and desert to a magnificent metropolis over the past 50 years, and the plans and agenda don't stop there. What the country achieved so quickly caught the world's attention, and this became the driver and attracted the initial capital. The shift from oil dependence to tourism and trade had begun, but much more was needed afterward. Global strategic planning, phased development, competent management, laws and regulations to govern every industry. In the past 70 years, Dubai's population has increased 165 times, and by 2023, there are 3.6 million residents here. Moreover, more than 80% of the residents are not Arab or locals, but foreigners that own property and work here. According to the forecast, this number will increase to 5.8 million residents by 2040. The city has established itself on the world stage as an international financial centre and a popular global resort. Dubai is a magnet for global investments and has recently become #1 at attracting direct foreign investments. At first, it had to earn its name, and now it's completely different. It's now attracting the largest companies globally due to its friendly tax policies and free zones, including Amazon, Microsoft, Siemens, Nokia, Nestle, Coca-Cola, Ford, Shell, which is one of the largest oil and gas companies in the world, as well as the largest banks, consulting firms, major pharmaceutical companies, tech companies, and it's the hub for AI and many other renowned global players. The Dubai International Financial Centre, DIFC, was founded in 2004. It was established to position Dubai as a global financial hub and has since become a leading financial centre in the Middle East, Africa, and South Asia regions. There were 2,403 companies registered in DIFC in 2019, increasing to 5,505 registered in 2023. 138 companies from Fortune 500 have headquarters in Dubai now too. This was largely initiated by the easing of property rights legislation for foreigners, the ease of doing business, a comfortable tax regime, and various initiatives to encourage investors. And for many years, this was a tax-free city. However, in 2024, a 9% corporation tax has been introduced, which is still much lower compared to other countries like the UK, Europe, US, where it's anything from 20 to 55%. This is why large companies are choosing Dubai, and this is coupled with other factors like the liquidity in the market, as well as the ease and speed of transacting and channels to bring foreign global investment into the country. And this is attracting the best talent globally, which in turn is attracting families due to other benefits, including the safety, the weather, the lifestyle, and schools. There were only 17 private international schools in 2005, but now there are over 220. These are other reasons why Dubai is one of the world's most impressive cities and among the top in the world's innovation and cultural stage. And it's no surprise that Dubai is one of the top 10 cities to live in the world, according to the Global Livability Index 2024. The market is in fact becoming more stable and stronger as a result. It is more measured and regulated at the same time, and this is clearly why Dubai is not in a bubble, as its economy is growing at the same time as its real estate sector, and this is largely to do with the initiatives of the government's agenda, vision, and future plans. You can never separate a city or country's economic agenda from its property market, and in 10 years we will look back and say, why didn't I buy then? Prices were so much cheaper. So what does this all mean? The real estate market is linked to the country's economy as a whole. So if the country is set up to develop economically, then people will definitely be attracted here, and the most basic need will be a roof over their heads, so housing. This is why demand for property will increase and will continue to increase. This is why developers continue to build and are trying to supply this growing market. Rental yields in Dubai are one of the highest in the world. Renting out property here gives stable and great income. The growth of returns has been faster than anywhere else in the world. Only Singapore developed at a comparable rate. And according to research, the average rent in Dubai rose by 27.7%. According to global statistics, the payback period for real estate and renting out your investment property is one of the fastest in the world. So 15 to 17 years for Dubai, 25 years for New York, 30 years for Singapore, 35 years for Paris, and 40 years for Tokyo. So whether you decide to invest in Dubai, that's up to you, but please subscribe to see more educational videos about real estate investments in Dubai, and please reach out to me for any advice or a strategy tailor-made to your investment needs.